Recently, a local wealth management platform named StashAway made the call to pull out of Chinese tech ETF KWEB, and there was a kerfuffle over this controversial decision. So for my foreign viewers who are not familiar with who StashAway is, it is essentially a local startup that has been around in Singapore since 2016 and has dominated the RoboAdvisory scene ever since. Currently, they have more than $1 billion in asset under management. So just some context, the robo-advisory space in Singapore is incredibly competitive, and you have other companies like Scythe and also Endowers as well. So why was pulling out of KWEB a controversial decision, you might ask? So I think context do matter. So the following discussion will just be a commentary based on my own research, and because I'm not a user of StashAway currently, I stand corrected if I misrepresented them in any way or any form. But you know what else cannot be misrepresented? Smashing that like button, of course, so don't let it get away. Now, the general consensus on why people were really triggered was really due to the perceived notion of buying high and selling low. So over the past year, before KWEB was essentially decimated to its low 20s, and mind you, that's 80% from its all-time high because it was trading near $110 in Feb of 2021. Now, if you were to go back to July of 2021, StashAway released a short article/podcast titled Market Commentary, Long-Term View of KWEB and Delisting of a VIE. So during that period, KWEB was around half price, trading at around the $50 region. So Freddie, who was the Chief Investment Officer of StashAway, set the backdrop of why their product offerings kept their exposure to KWEB despite the doom and gloom picture that a lot of other investment firms paint. So a few key points to include: we need to start looking at the potential that it brings beyond the immediate. So China's 5-year or 10-year plans revolves around technological revolution. So StashAway feel that the long-term potential for China is immense because of the structural investment they are making, such as building their own 5G network and also the chip-making capabilities to reduce their dependency on other trading partners and other trading countries. So he then went on to explain that the VIE scheme being voided is probably out of the picture because there are immense ramifications to such actions. But delisting concerns are probably quite real. But KWEB is well protected because Crane Shares themselves pledged that they will be converting most of their holdings back to Hong Kong soon to shield investors from this delisting event. So long story short, I share the same sentiments even until today. TLDR, they essentially told investors to activate their diamond hands and continue holding on to their KWEB exposure back in July of 2021. So they've been singing the same song since middle of last year until recently where they decided to cut out their entire KWEB's exposure. So after that decision, all hell broke loose and there was a barrage of commentaries, comments and arguments online, even memes being created surrounding the entire topic itself. And I'll just edit some of them here as a teaser for people that are interested. So there was a screenshot that was circulating online where one of its StashAway users actually reached out to the country manager of StashAway in light of trying to gain some form of clarity and explanation. Long story short, they liquidated all their Chinese exposure, not only KWEB. And the main reasoning was due to the threat of a secondary sanction from the US to China. He went on to assert that, hey, sanctions are vastly different from tariffs, which are still deeply etched in our minds during the Trump administration. And they can't reconcile the risk of holding onto Chinese equities and decided to just bite the bullet and get out. So their CIO, which is Freddie, was also on a podcast with The Financial Coconut, which is a local leading financial podcast. And I'll include a short clip of his explanation.
Just share with us a little bit, like what's going on with you, like what are you guys thinking of, like, and all that. Like, what is the situation? How are you sensing things?
Let's put the elephant in the room.
Yeah, that's what everyone wants to hear, right? Having you on to talk about the KWEB, yes.
The decision was not a price-driven one because otherwise it would have been last year's stuff. With investing, what we do is, we get rewarded for taking risk, but the risk is of a known, unknown nature. Not unknown. So even up until 9th of March, our views remains intact. China will have a different monetary cycle than the US. They will probably stimulate. So this is nice. The tech revolution is long term, right? Remains intact. It has this regulatory headwinds to get through. But as long-term investors, we're fine with it. However, we had trended into unknown where, in particular, secondary sanctions. What happens in a sanction is really key. It's just to tell you an example, a fund manager friend of ours, they were stuck with a Russian or energy company. And that's instantly written down as zero, the holdings. Activities are frozen, assets are frozen. So the rules of engagement has completely changed. It's not about valuation, it's not about returns, it's about whether you want to take that unknown risk of being sanctioned and hence being frozen in terms of your funds, right? So this is a complete different ballgame, and we decided that, look, with or without it, we can divest globally and across asset classes to gain returns. Why be in something that we do not no longer know what's going to happen?
I think a lot of the chatter online is like, oh yeah, you guys were like pro-China for so long and all that, and then now you pull, right? So can we kind of lay the grounds for a lot of people that don't have the context here of like, what is so sexy about China? Are your views still intact there, and all that?
Our long-term views remain intact. It's the implementation.
Okay.
Like I said before, China's central bank is going to do the opposite to the Fed, most likely, or at least they hope. That's a nice way of diversifying rate risk. To the government, yes, they verbally reverse, so maybe that is good. But what remains unknown is whether, all you need is one company in China, somewhere in the world, get into the crosshair with the US measures on Russia, and then the one entity gets sanctioned, however small it is, the entire spectrum of Chinese entities would suddenly be priced for that risk in the world. So that is the unknown I meant, or even assets being frozen. So it's an implementation problem. Until that risk is known or more clarified, is then we would sort of remove these temporarily restrictions on our China investments. At the moment, regardless of what the market is doing, we could not evaluate that scenario, like I just mentioned.
So
view hasn't changed. It's an implementation.
Okay, so view hasn't changed. In other words, in your investment thesis, it is still long China, right? So
yes.
Okay, but you're not implementing because of all the uncertainties that you're saying.
So, I just wanted to echo similar sentiments of how Freddie laid the ground for Chinese equities today. So it explains why I'm still invested in them. So for those of you who are interested in the podcast, I'll leave the Spotify link below. Now, since you clicked into this video, of course, you are here to understand my position and my explanation. So to give it to you straight, I can kind of understand why the investment team made that decision, but agreeing to it or not, it's a separate issue. So I have to look at it from a platform point of view. After the recent Russian-Ukraine conflict, it's true that the temperature and tension rose by many notches. There seemed to be an increasing appetite for world powers to essentially flex their muscles. So when you're managing clients' fund, especially such a huge sum of money, the most problematic issue would be the one that relates to liquidity. So for funds that had exposure to Russia, they would definitely have first-hand knowledge and experience. Now, do I agree with this decision? Probably not, but I think most investors would look at it from a probabilistic lens. And although we know that by the day, the risk of sanctioning each other magnifies, there are many tricky ramifications in between that cannot be squared away simply. So to give you an example, what do you think China would do if the US meted out equal treatment to them, like Russia? To put things into perspective, don't be too confident on who has the upper hand. Sometimes we need to really see things play out first to really understand who has real leverage. But of course, touch wood, I hope the world will never come to this extent. Similarly, the risk of World War III seemed so distant a few months back, but the possibility is definitely getting more real. But how probable is it today? So the short answer is, we don't know. So as a responsible platform, like how they put it, you can argue that they are doing the right thing because they are unable to assess the risk. That's why they decided to pull out. So as for investors that don't really agree to such an arrangement, you can always buy into KWEB in your own personal capacity to retain your exposure. Ultimately, you decided to put your trust on that platform, and you have to accept the decisions that they make. It's a free market, work with it. So personally, I do have a dollar cost averaging strategy into KWEB where I put in money on a monthly basis, and I started this back in November of 2021. So my starting price was around $52, but my average is currently sitting at $37. Still in the red, of course, because red is my middle name. But for people who fundamentally want exposure to Chinese tech sector, what's exactly stopping you? I think that's a question I would like to ask you. So you take charge of your own investment portfolio to express your worldview. So to end off this video, I think this post made incredible sense. If KWEB continues plummeting, people will be commenting that, hey, StashAway had bad investment foresight for holding onto it for so long. If KWEB goes up, people will be echoing sentiments of buying high and selling low. Whether it goes up or down from here, there will be an equal number of backlash. 好人难做呀. With that, I'll see you on the next video, but more importantly, I will see you on the moon. Goodbye!